What if I told you that the biggest financial lie you were ever taught is hiding in plain sight? You've heard it your whole life. Countries borrow money from other countries. America borrows from China. Europe borrows from America. Africa borrows from the IMF. Everyone owes someone. But pause. If every country is drowning in debt, if the US owes $35 trillion, Europe owes 14 trillion euros, Japan owes 1 yuan quadrillion, and dozens of nations are bankrupt by definition, then who is the global creditor? Who is the mysterious lender powerful enough to hold the entire world in debt? Here's the part nobody told you. It isn't China. It isn't the IMF. It isn't even the Federal Reserve. What if the real creditor isn't a government at all? What if the world's debt is owned quietly, invisibly by a financial machine that creates credit offshore, outside the law, outside democracy, outside borders, and then profits from global dependence? What if every debt crisis from 1997 to 2008 to 2020 was not a failure, but a business model? And what if the same mechanism is operating right now, silently tightening its grip on your money, your job, your savings, your future? Before we continue, to drop a comment below. Where are you watching from? Let's see how global this community is. And if you're here for unfiltered truth, hit that subscribe button, because videos like this don't get recommended by accident. They get suppressed. Now, let's pull back the curtain. The story begins long before modern banks, long before the Federal Reserve, long before nations even existed in their current form. Debt has always been a tool of control. Ancient empires 4,000 years ago. The Babylonian kings discovered something dangerous. People will do almost anything when they owe money. Debt became a weapon, a way to extract loyalty, a way to expand power without going to war. Sound familiar? Rome in Rome. The entire economy ran on credit. Wealthy elites issued loans. Citizens became debtors. Entire political careers were built on forgiving or enforcing debt. When Rome collapsed, it wasn't barbarians. It was a debt crisis. Mass defaults, credit freezes, bankers fleeing the city. Sound familiar? The Knights Templar. By the Middle Ages, something new emerged. Private banking networks. The Knights Templar created the world's first international cross-border credit system. Pilgrims deposited money in London, withdrew it in Jerusalem. They bypassed kings. They bypassed borders. They bypassed taxes. Sound familiar? The birth of central banks in the 1600s and 1700s, countries realized something terrifying. Private banking networks were more powerful than monarchies. So nations created central banks, the Bank of England being the first major one to regain control. These institutions created a monopoly on currency. They issued government debt. They financed wars. But something else happened. Governments became addicted to borrowing. They needed more money than they could tax. So central banks printed a tad interest. The cycle had begun. The U.S. Federal Reserve, 1913, when the Fed was created, its mission was clear: stabilize the system, control credit, manage crises. But what followed? The Great Depression 1929, the Latin American debt crisis 1980s, the dot-com crash 2000, the global financial crisis 2008, the pandemic collapse 2020. Every era brought more instability, not less. Sound familiar? And with each crash, something strange happened. Private banks got larger. Shadow markets got deeper. The financial system moved further away from public control. Bretton Woods, 1944. This is where the modern illusion truly begins. After World War II, the world wanted stability. So nations agreed to anchor currencies to the US dollar, and the dollar would be backed by gold at $35 per ounce. Simple, honest, straightforward. But by the 1960s, there was a problem. The US was printing more dollars than it had gold to back. Countries like France noticed and began demanding gold for their dollars. So in 1971, President Nixon ended the gold standard. Overnight, the world entered the fiat era money backed by nothing but trust. But here's the plot twist. Ending the gold standard didn't just free governments, it freed banks. Money creation left the vaults and moved into the shadows. The rise of the Eurodollar, the key clue while the world focused on Nixon, something bigger was happening offshore. Banks in London, Singapore, the Cayman Islands, and Switzerland were creating US dollars outside the US. These offshore dollars, called Eurodollars, weren't regulated by Washington. They weren't recorded, they weren't supervised, they weren't limited. These shadow dollars became the lifeblood of global finance. No votes, no oversight. Just private contracts. This system grew so massive that by the early 2000s, the offshore dollar market was larger than the entire US banking system. Sound familiar? The world thought governments controlled money, but offshore markets controlled credit. And credit, not cash, is what runs nations. Every financial crisis of the past 50 years can be traced back to this shadow system. And now we reach the twist, the moment everything changes. Here's the truth nobody wants to say out loud. Countries don't borrow from each other. They borrow from the shadow system that creates money through derivatives contracts that have no physical existence. The real creditor is invisible, a machine, a network. A system of offshore contracts that can create trillions overnight. And it all started with one quiet innovation, the derivative. A financial contract designed to manage risk. But risk didn't disappear, it multiplied. Banks discovered they could use derivatives too. Create synthetic dollars, leverage assets 20-1, 40-1, even 100-1, lend money without having money. Convert future cash flows into present-day profit, hide bad debt, and expand credit beyond anything governments could control. This wasn't banking. It was alchemy. And by the late 1990s, one man saw what was coming. One regulator, one warning. He told Congress, if you allow unregulated derivatives to grow, they will one day destabilize the entire global financial system. You won't believe the name, and the receipt is wilder than you think. The shadow system. How debt is created without money. Let's pull the curtain back fully. Because this is the part 99% of people never hear, and 100% of governments never want to explain. You ask the question, if every country is in debt, who's the creditor? Here is the truth. The world's creditor is not a nation. It's a system. A decentralized, unregulated, offshore, derivative-driven network of financial institutions collectively known as the global shadow banking system, the real-world government, the invisible lender, the machine that creates and prices global debt. And to understand how this ghost creditor works, you need to understand 5 dangerous mechanics. Mechanism 1. Eurodollars. Money created. Outside any country, Eurodollars are US dollars created outside the United States. No Federal Reserve oversight, no government approval, no congressional vote, no physical paper dollars involved, just offshore banks typing numbers into a ledger. By 2007, the Eurodollar market controlled an estimated $13 to $15 trillion. Some analysts say the number was closer to $30 trillion because most of it was off-balance sheet. This is the part that should shock you. Eurodollars are the world's primary source of global credit. Not Washington, not Beijing, not Brussels. Private banks, offshore, invisible. Every country uses Eurodollars for trade debt issuance, currency stabilization, commodity purchases, meaning when nations borrow money. They borrow Eurodollar credit created by shadow banks. This is the first clue to who is the creditor. Derivatives became Wall Street's favorite tool because they solve a simple problem. Real money is limited. Derivative money is infinite. These contracts allow banks to create synthetic dollars, turn $1 into $20 or $50, hide risk, sell debt multiple times, launder losses, and borrow without borrowing. In 2000, The global derivatives market was around $95 trillion. By 2007, it exploded to $500 trillion. By 2023, estimates range between $1 quadrillion and $2.50 quadrillion. That's up to $2,500 trillion of synthetic credit. Now compare that to world GDP, $105 trillion global stock market, $120 trillion total world money supply, M2. $90 trillion. The derivatives market is 20 the global economy and 25 all the money on Earth. Let that sink in. A market that doesn't physically exist is bigger than the world that does. This is how the shadow system becomes the world's creditor. It doesn't lend money, it creates obligations. Debt backed by debt. Promises backed by promises. Nothing backed by reality. Mechanism 3. Repo markets. The world's real cash printer. Here's the part most people never hear. Central banks don't control global liquidity. Repo markets do. Repos repurchase agreements allow institutions to exchange securities for cash overnight or for a few days. Shadow banks use repos to borrow trillions using collateral. They don't own reuse the same collateral 10, 20, even 50 times trigger liquidity shocks. Crash markets overnight create systemic leverage that governments can't see. In 2019, the U.S. repo market seized up when overnight rates suddenly jumped from 2% to 10% in a single day. Why? Because the shadow system ran out of synthetic dollars. That crisis was so severe, the Federal Reserve injected $6.6 trillion into repo facilities within months. Not to save banks. To save the offshore system banks depend on. Again we ask, who is the creditor? The shadow system. The real issuer of global liquidity. Offshore tax havens, where national debt goes to disappear. Countries don't just borrow money, they lose it. The same institutions that lend to governments also help elites move capital offshore in too. Cayman Islands, Luxembourg, Ireland, Singapore, Switzerland, Bermuda, British Virgin Islands. These tiny jurisdictions, many smaller than a mid-sized city, hold an estimated $36 trillion in hidden assets. Corporate earnings, sovereign bonds, shadow derivatives, collateral chains, and yes, public debt payments. Government debt flows in. Shadow institutions collect. Profits disappear offshore. Taxpayers pay the bill. Shadow creditors take the interest. Mechanism 5. The Great Collateral Pyramid. This is the heart of the whole conspiracy. Because this is where the shadow system becomes the world's creditor by force. Banks need collateral-safe assets, so they use U.S. Treasury bonds, German bonds, UK gilts, Japanese government bonds. But here's the trick. The same bond can be pledged as collateral multiple times. This is called rehypothecation. Imagine you give your house to the bank as collateral for a loan. The bank then reuses your house to get its own loan. That bank's bank reuses your house again. This continues endlessly. You still own one house, but 20 institutions believe they own the collateral rights to it. In London, there is no legal limit to how many times collateral can be reused. Meaning, the entire global financial system is built on the same assets copied over and over again. This is how money is created without money. This is why the world can owe $300 trillion in sovereign debt. Because the shadow system can fabricate infinite credit out of a finite amount of collateral. The result? A global creditor without borders, laws, or accountability. The moment the system revealed itself 2008 wasn't a housing crisis. It was a collateral crisis. Mortgage-backed securities collapsed. Banks realized their collateral wasn't real. Synthetic credit evaporated. Derivatives triggered a chain reaction. Eurodollar funding froze. Repo markets died overnight. The shadow system collapsed under its own weight, and governments did not rescue banks. They rescued the collateral system. $700 billion TARP dollar, $16 trillion Fed liquidity, $29 trillion worldwide guarantees, $1 trillion ECB backstops. Why? Because if the shadow system died, global credit would cease to exist. Governments were not saving Wall Street, they were saving their creditor. The 2020 panic, the second reveal when the pandemic hit. Something strange happened. The stock market collapsed by 35% in weeks. Oil futures fell to $37 per barrel. Bond markets froze. Repo markets seized again. The Fed printed $4 trillion. Central banks opened 14 global dollar swap lines. The U.S. Treasury absorbed $3 trillion in new debt, but none of that was to support citizens. It was to prevent the global shadow system from imploding, because if it fell, every government would default. Every currency would lose credibility. Every economy would collapse. The invisible creditor would vanish. And with it, the illusion of global financial stability. Who actually owns the world's debt? Not China, not the IMF, not wealthy elites, though they benefit. Not central banks, though they cooperate. The true owner is a decentralized network of offshore derivative creating, collateral leveraging shadow banks that operate above nations and beyond the law. That is your answer. The most unsettling reality: no one controls this system. Not presidents, not prime ministers, not parliaments, not central banks. Everyone, governments, corporations, individuals, borrows from a ghost creditor powered by synthetic dollars off-balance sheet leverage. Infinite derivatives, collateral pyramids, shadow liquidity pools, hidden offshore accounts. This system is not a conspiracy theory. It is the beating heart of global finance. And it has one rule: all nations must remain in debt for the machine to function. The borrower is slave to the lender, and the lender doesn't even have a face. This is the part most viewers never hear, because this is the part that makes people uncomfortable. You now understand the real answer to the question: if every country is in debt, who's the creditor? It is not a nation. It is not a government. It is not a central bank. It is a system, a decentralized offshore synthetic credit machine that survives only if every country stays indebted forever. And here's the final warning: the next collapse will not look like 2008. Back then, the system cracked because of mortgage-backed securities. Today, the system is bigger, faster, and far more global. The derivatives market is now over $2 quadrillion. Global debt is above $315 trillion. Collateral chains are longer and more fragile. Repo markets are more concentrated and more leveraged. Synthetic credit creation is nearly instantaneous. Most crises unfold in hours, not months. The machine has scaled beyond the ability of any government to control it. This is the danger. If the next collapse begins in the shadow system, every economy will feel it instantly. Not slowly, not locally, not controllably. Instantly. Because the world's true creditor, the shadow banking system, does not recognize borders. And when it panics, there is no safety net. Not for governments, not for banks, not for citizens. Every empire in history collapsed for the same reason: denial. People trusted systems that were already burning. They believed illusions because the truth felt too heavy. They assumed the crash wouldn't happen in their lifetime. But today, you know what powers the global financial world. You know who the real creditor is. You know how governments keep the illusion alive. And you know the truth. The global debt system survives only because we agree not to question it. But now you have questioned it. Now you see the gears turning. Now you understand the stakes. So I'll ask you, not as a creator, but as someone trying to wake people up: are we wiser now? Or are we walking the same path in better suits? Drop your thoughts in the comments. Tell me where you're watching from. And subscribe for more unfiltered truth, because no one else is going to explain what's really happening.